it's all about money. With your host, CPA and forensic accountant, Sam Rosenfarb.
You're watching It's All About Money. Nobody knows more about money than accountants. Hi, I'm Keith Balla. I've been an accountant for over 20 years, and I can tell you from firsthand experience that everybody, in some way, on a daily basis, is motivated by money. As an accountant, I've seen hundreds of professional firms merge. Some succeed while others fail. Success and failure is determined by many factors, but the most important factor is money. This show is all about educating you, teaching you about how money plays an important role in all of our lives. In this episode of It's All About Money, you'll learn about two of New Jersey's largest forensic accounting firms becoming one, and the reasons for their merger. With me today are my partners, Sam Rosenfarb, formerly managing partner of Rosenfarb and Company of Roseland, New Jersey, and current managing partner of Rosenfarb, Winters and Company, and Alan Winters, former managing partner of Winters, Ibex, and Maggio of Eatontown, and currently partner in charge of the firm's matrimonial department. With this merger, Rosenfarb, Winters and Company is now one of New Jersey's premier forensic accounting firms and largest matrimonial accounting firm. Sam's broad experience translates into a keen ability to assess all different types of financial situations in the blink of an eye. He is a keynote speaker and frequent television guest. Sam has overseen hundreds of governmental fraud investigations, white-collar crime investigations, divorce litigations, and investigative audit engagements. Alan Winters is an expert in investigative, forensic, and litigation support accounting, which includes matters dealing with divorce, business valuation, contractual disputes, and conservatorship, as well as damage calculations, including personal injury. Mr. Winters frequently speaks and lectures at seminars given to lawyers, accountants, judges, and mediators. Welcome, Sam and Alan. So, Alan,
thanks, Keith.
How did you come to be a divorce litigation expert?
Well, I was involved in a major business in New York City, which was sold, and I left New York City, came back down to New Jersey where I previously lived, and really had nothing to do, and I was looking for something to do, and because I had lived in this area previously and practiced accounting there, I knew quite a few lawyers, judges, etc. So I was speaking to a judge one night at a party, and I said, you know, I think it's a great idea that the accountants get involved in divorce litigation, because you need to do valuations, you have to have tracing of assets, income, etc. And this judge, who was a matrimonial judge at the time, said, great idea, I think you ought to do that. And that's what I did. Unbeknownst to me, of course, there were other people doing it. I thought I was an innovator, but there were other people doing it at the time.
You thought you created the whole the industry.
Right. Well, it was very small at the time, and we've come a long way since then, because now I would say almost every matrimonial attorney uses financial experts, when at that time they did not.
Well, you are known in the professional community as an innovator in the matrimonial accounting field. We've known each other a lot of years.
Right.
And you're one of the few accountants who exclusively practice in the litigation support area. You even had on your stationery and on your marketing material that your practice was limited,
right.
Unlike our firm, where I stumbled onto litigation. Right?
Sam, what are the advantages of Winters and Rosenfarb, the merger coming together?
Well, Rosenfarb and Company was a full-service accounting firm. We did we prepared tax returns, we represented individuals, we represented businesses, we did auditing, reviews, compilations, financial statements, and we did a lot of litigation. Most of our litigation was centered on white-collar crime, some fraud investigations. We did some commercial investigations, and a little bit of matrimonial work. We had one partner of the 5 partners who was exclusively handling divorce. Winters, Ibex, and Maggio was predominantly matrimonial oriented, predominantly divorce oriented. And I saw that by merging, we could provide a greater array of specialty, greater array of talent. After all, this business is just about people. We don't have machines that do the work, we just have people. And by merging, we had more people who had more talent, more competence in the divorce arena. And at the same time, we had more people who could provide talent in the fraud arena, the investigation arena, in the white-collar crime area, in the commercial litigation area, to those clients of Winters, Ibex, and Maggio. So basically the answer is I saw more money. It made sense to merge because we were going to make more money by providing more services to more people.
And how does that benefit those clients?
Well, the clients who we represent, and our clients are varied, and they're referred to us by the lawyers whose litigation is being handled by them. We're able to provide greater expertise, greater efficiency, greater talent. We now have somebody in the firm who's an expert at valuing just professional practices, just chiropractors, doctors, dentists, just professional practices. We have another person in the firm whose business is just valuation. They're not even an accountant. They're just a valuation expert. We have another person in the firm who just handles personal injury valuation. So we can provide our clients with greater expertise, more efficient productivity, with greater competence.
Okay.
This is the time of the specialists, and as doctors specialize and...
Right. As a divorce specialist, you often hear that the husband gets all of the money in a divorce and the wife gets the short end of the stick. Tell us what really happens.
Not if you ask the husband that. I think the husband will tell you the other way around.
What really happens?
Well, what really happens is that you try to determine the amount of value of assets and try to distribute them equitably. Equitably does not necessarily mean equal, but you try to distribute them equitably. You try to determine the amount of earnings that both parties have. There may be two earning family, and even if it's one, you talked about the husband thinking that he's coming out with the short end of the stick. If he's the only earner and he was providing the income for the family previously, he still has to continue to provide income for the family.
And where do they hide money typically? When they don't want you to find what they really are
Well,
worth?
either in your mattress or in a box in the backyard, either one. In fact, I'll tell you, that's the hardest thing to find is somebody is burying in the backyard, but usually people don't do that. They spend what they take.
It's hard to keep it in the backyard or in a mattress because it's not earning interest. And at today's investment rates, some people are earning 15, 20% a year. And so at 15 to 20% a year, if you keep it in the mattress, it doesn't make any sense because you're losing all that money.
So when you hear about the wife, typically the wife complaining, my husband has all this money, but I don't see it, I don't know where it's going to.
Well, the first thing in every divorce case that the wife will say is, he's got money in Switzerland. I mean, we hear this in every case. There's money in Switzerland, the Cayman Islands, Bahamas, and if I've ever found, I haven't found one yet in Switzerland, so I don't think that that's the case.
Well, then, Sam, how does your involvement enhance and get justice in these situations?
Well, we see our role. Our role in these cases is as a settlement facilitator. That's how ultimately all of us see our role in the litigation process, is to facilitate a settlement. So if we're representing the husband, and the husband happens to own the business, which is less and less, more and more frequently, the wife owns the business, or the wife and husband each own a business. But if we're representing the business owner, and our role is to value the business for him, if we value it very low because he's our client, that's not going to facilitate a settlement. We have to be fair. So I see our value in being able, one, to know what's fair, to know what's right, as compared to those accountants or those experts who've only dabbled in this field, who don't know the difference between...
So that you don't take a side then?
Well, let me comment on that. I think
that's an excellent question. Do we take a side?
I think that we've built our reputation over the number of years that we've been doing this as some firm that is very honest and forthright. And the more you build your reputation like that, the more business that you get and the more lawyers that come to you. And if it is a divorce, and don't forget we do other things other than divorce, but if we do a divorce and we're jointly agreed upon, it's only because both lawyers know of our reputation and both lawyers know we'll do this fairly.
Right, but if you're not jointly agreed on, doesn't the attorney want you to have the highest possible value?
You know,
Well, it depends on the attorney. Some attorneys do, some attorneys don't. But irrespective of what the attorney wants, we have to do our job. We're not employees of the attorney. We're not our opinions are not directed by him. We come to our own conclusion. And if we see our role, and I do very seriously, see our role as a settlement facilitator and not an obstacle to a settlement, then we'll do our job fairly and responsibly. Now, that doesn't mean that we overlook things that are going to help our client because it hurts the person who our client's adverse to.
Right.
So-
How do you do that? How do you find the dirt and the true story and the true numbers when somebody is looking to hide things from their spouse?
Let me just back up 1 minute and comment on something that you asked Sam, and I just want to make one comment on it, and that is, I don't think in all the years I've been doing this, I've ever had an attorney say to me, I want you to make this come out in such and such a manner. It doesn't happen that way. Attorneys give you a job, they expect a fair job to be performed.
Well, I've had attorneys tell me that they want as high a number as possible.
I have not
They
had
want
that.
me to stretch it so it can be as high as possible. I have had attorneys say that. Working for the wife, they say, I want this number high or I want this number low. And they'll even, I've had attorneys try to dictate how I value the business and what capitalization rate to use and what methodology to use. And those attorneys, if I can't persuade them, become ex-clients because I resign. You know, we have an obligation to our firm, to our profession, to the system, and to ultimately to a long-term relationship with many more clients where we have to be fair.
Well, what sets you apart from other accountants in this area?
Well,
why would somebody want to use you versus another accountant?
yeah.
I think that, as I previously said, you build your reputation on fairness and knowledge and doing a good job. You know, we all have passed an examination that was given by the American Institute of CPAs, which is one of the few designations other than CPA, which is ABV, accredited in business valuation. And every member of our firm that's involved in divorce or business value has that designation. So that kind of sets us apart from other firms. There are other
We have
people
more
that
of those
it.
designations than any firm in the state. We have 4 people of our firm. Half of the partners in our firm have that designation.
Do you ever get involved in any, like...
Excuse me, 5.
5.
Right, 5.
We have 5 people of ABV?
Right,
I thought it was only 4 of us.
5.
I apologize.
I know a large percentage of students that go to school for accounting now it's a high population of women. Is your firm typically diverse, where you have a high percentage of women, men, women?
It's very interesting. I think 55% of the graduates, accounting graduates, are women, but only 2% of the accounting firm partners are women. At our firm, of our 8 partners, we do have 8 partners, right?
Yes.
Okay. Of our 8 partners, we have 1 woman, which is a percentage of 12.5%, if my math is right, which is a huge percentage, but it is 1 woman partner.
And overall professional associates, professional
About
staff?
half, I think. About half the staff are
Yes,
women.
Yes, a lot of
And
women.
how
I
does-
want to get back to your question before, is that what differentiates us? We're all unique. I'm unique, you're unique as the firm, Alan's unique, all of the partners are unique, but we bring with us a sense of business acumen at the firm, which is, I think, second to none. We have business experience outside of accounting, and we have creativity to carve out a settlement, creativity to articulate our positions.
So when you're involved in a settlement, it's not crystal clear, straight down the line, and this is the right number. There's latitude.
One of the huge advantages of settling, as opposed to having a judge impose a decision, is, one, you're in control of the settlement process yourself. So you can settle and be very creative. You could have terms of settlement. You can have settlement based on, in the sale of a business, we call it an earnout, based on how profitable a business is in the future. You can have a settlement based on pure emotions. So if you settle, you can be very, very creative. You don't have to be bound by just dollars and cents.
I'm not quite sure of this, but I believe that statistics proves out that settled cases last longer than adjudicated cases, because each person has a party to the settlement. They participate in the settlement. They agree to certain items in the settlement.
That's one of the huge advantages to mediation, as opposed to having adjudication, where the 2 parties can meet with an impartial mediator who attempts to extract a settlement from either side. He doesn't impose a settlement. He merely acts as a facilitator to settle. Alan, you're an accredited mediator.
Yes.
And you perform many mediations in divorce.
Yes,
Right?
I'm an accredited professional mediator, of the New Jersey Association of Professional Mediators.
And attorneys have referred clients to you to mediate.
Yes.
Attorneys where they have a client whose case they can't settle, and the costs are becoming prohibitive.
Do you get involved in mediation also with criminal cases?
No, I have not done that. No, I do divorce and commercial
It's hard to
mediation.
mediate between the government and a criminal.
No, I would say two partners in a business and one stealing from the other.
Oh, I've been involved in mediation in commercial cases other than divorce.
Right.
But it's not a criminal case. There's no threat of jail to any of the parties.
You know, we constantly talk about divorce only because I am the partner in charge of divorce, but the firm of Rosenfarb, Winters and Company does much more other types of litigation work. For example, we do oppressed shareholder suits. And today you're finding a lot of oppressed shareholder suits where I know you said something about criminal, but where two partners don't agree in a business.
That's a business divorce.
It's a business divorce, right. And there's a lot of that. And we have had quite a few oppressed shareholder suits.
And the business divorces are more emotional, I find, than even the matrimonial divorces. These are partners who have a financial arrangement and they're splitting up, and the emotions are violent.
Yeah. We're meeting with Alan Winters and Sam Rosenfarb, and we're just going to take a short break, and we'll be right back.
There are some people who think those suffering from mental illness should be locked up and kept from society. Obviously, there's a flaw in that thinking. People with mental illness have helped society move forward. Don't hold them back. A message from the New Jersey Association of Mental Health Agencies.
Come on.
No, Scott. I don't think we should.
Come on. It'll feel good.
You promise?
Come on. We're old enough.
Well, okay. Wait, I hear your mom.
Don't worry. She never comes down here.
Hi, this is Keith Ballin, and we're back with It's All About Money with our guests, Alan Winters and Sam Rosenfarb. So we talked a lot about divorce. Sam, what other cases do you get involved in other than divorce?
Well, our firm has a myriad of litigation cases, from bank fraud to tax fraud to partners stealing from each other to calculating damages, contractual disputes. We also do work other than litigation. We're involved in estate planning, income tax planning, cost reduction programs, profit enhancement. We do business consulting. We're able to consult with businesses and show them how to make more money, generate more sales.
What's the biggest or most exciting case you've ever been involved in?
Well, the most interesting, which may not be the biggest, the most interesting case I've ever been involved in is we were retained by an insurance company who had provided a $40 million life insurance policy on a business executive. $40 million is a lot of money. This $40 million policy replaced a $25 million policy, which was outstanding for 2 years. This business executive had the majority shares of a small publicly traded company. It was a family company. And 2 months after signing on for this $40 million policy, they found them splattered on the sidewalk in front of his lawyer's office building, Manhattan. And the 40th story floor where his lawyer's office was located, the window to the men's room was found open. There was a garbage can right in front of the window, which looked like somebody climbed on top of the window. Somebody climbed on top of the garbage can, looked out the window, and then jumped, and they found him splattered. So naturally, after an appropriate mourning period of about 30 seconds, his wife went to the insurance company and said, "I want my $40 million. And the insurance company said, "Well, it looks like suicide to us. You know, it looks like he went into the bath, he was visiting with his lawyer, he went into the bathroom, he took the garbage can, put it in front of the window, got on top of it, opened the window, jumped out and splattered." He said, "It looks like suicide." She says, "No, it wasn't suicide. Maybe he was pushed. Maybe he tripped. Maybe he fell. Maybe he opened the window just to get some fresh air. And the policy had a suicide exclusion. If there was a suicide within 2 years of the policy, nothing was paid. So if this were suicide, the insurance company would have saved $40 million. Whereas if it was accidental or he was pushed or murdered, the wife would get $40 million. So the insurance company hired 3 experts. They hired a psychologist to review his affairs, his prior affairs, to determine was he mentally motivated to commit suicide. They hired our firm, they hired me, to determine did he have a financial motive for suicide other than the $40 million? Did he have business problems? Was he straddled with a lot of debt? And they hired a physicist, which I found fascinating, a physics professor from Rutgers, who determined that the angle of descent from this window, right, the way he landed smack dab on the sidewalk, could only have been caused by a jump. It couldn't have been caused by somebody pushing him, and it couldn't be caused by somebody slipping. It could only be caused by a jump. So the 3 of us, the 3 experts, the psychologist, the physicist, and myself, prepared our reports and convinced the insurance company, of course, that it was suicide. And I believed it was suicide, and eventually, as you said, so many cases settled. This case settled as well. But that was my most interesting case.
All right. How about you, Alan?
I don't have a $40 million story to tell you.
What was your most
But
interesting
everything is relative. So my interesting case was a...
By the way, we didn't get the $40 million. It would have been a lot more interesting then.
or a piece of it.
Or a piece, right. We, all of our fees, and we should say, all of our fees are based on the hours we spend. We don't have an interest in the outcome. Whether the client wins or loses, we always get paid.
So if they win a lot of money, you don't get a piece of that.
No,
That's correct.
we do not work on contingent
Right,
fees.
we don't work on a commission. Right. Although sometimes we'd like to. I'm sorry.
That's all right. I had a small business, a repair business, appliance repairs, where when you walked into the business, there were big signs that said, we do not accept checks. We only accept cash or money orders. So I started to do my forensic investigation, and I asked the owner of the business to walk me around the business, explain it to me, how they received their revenue, et cetera, and they had some warranty work they did, and whatever. And then after about an hour of walking around the business, I kind of caught him off guard when I said, let me see one of your day's sales, any day, or any month. So he opened a drawer, he pulled out 1 month's sale. I said, okay, I'd like to do some work. And I took a look at these month's tickets, and on some tickets it had a code, it said PDCH. Well, you don't have to be a rocket scientist to figure out that meant paid in cash. And then I took all the bank statements.
Could be paid by check.
It was paid by cash. So I took all the bank statements, and I wanted to see how much the cash was deposited. And I looked at 3 years' bank statements. What do you think the answer was? He was a pig, because there was 0 deposit. Never once did he deposit cash in this business.
Wow.
And it
Always checks.
always money orders or checks that he deposited in the business. So obviously he was taking the cash. And he had such good records that on every single deposit ticket was the name of the customer. So I was able to take the tickets that said PDCH and trace them back to the deposit tickets to see that they weren't there. But that's not the end of the story. That's only the beginning. Because I then asked him, I said, well, you gave me 1 month. You gave me the month of November 1991. I would like to see all of the tickets for 3 years. By this time, he knew what I was doing. So he said, I don't have them, I don't know. And,
Miraculous disappearance.
Right.
So do you report that then to the judge in the case?
Well, wait. This is, as I said, only the beginning of the story. So he called me back about 2 months later. He said, I have all your tickets for you. And when he called me back, I looked at the tickets, and I see that they're different color paper, that there was red and blue lines on the ticket, that the shading of the blue and red didn't line up. And the biggest thing was his tickets were numbered, and he had the number sign NO with a little line under it on the old tickets. When he had them reprinted, they forgot to put that on there. So I knew that all these tickets were reprinted. He had gone to a printer and reprinted another series of tickets, took the time to pull out all the cash tickets and insert them with these new tickets. Well, of course, we knew what he was doing. And we did an extrapolation of that 1 month and determined how much cash he was taking out of the business. And it was substantial.
A substantial amount.
Substantial.
Right.
What did he do with the cash?
He spent it. He lived on it. You could determine some of his lifestyle where
He was spending more than he was reporting.
by a long shot.
Yeah.
It wasn't even close.
Right.
Recently in the news, there was a story about a money manager who stole about $3 billion from his clients. What typically would you do to uncover that, or tell the company to implement to stop that kind of abuse?
Well, internal controls are what we in the accounting profession, we have this term called accounting controls, financial controls. And what that is basically a checks and balances on the handling of assets, the company's money. So if this company had internal controls, he wouldn't have been able to divert all this money. If there were controls, for instance, he was supposed to be buying investments. Instead, he was siphoning off all this money to Switzerland, to Swiss bank accounts for himself. If there were controls in place or audits in place, there are auditors who monitor to determine that the controls are implemented and they're being used and they haven't been thwarted.
But they're not there to detect fraud.
Auditors generally are not there to detect fraud, although our firm as fraud auditors do detect fraud. We're frequently engaged to find fraud, to uncover fraud, to prevent fraud from reoccurring, although we can't guarantee that fraud ever.
And have you had high-profile cases like that?
You know, many small business people deliberately have poor internal controls and sloppy records because they themselves are stealing the money and they don't want anybody to know it, so they deliberately do that. But the downside of that is that it permits their employees also to steal.
Right.
And that's the one thing they don't understand.
So that's what this money manager in Connecticut, he was stealing. He had a lack of controls because he wanted to keep stealing. We've had a lot of high-profile cases, government cases, school board cases, municipal cases, a lot of cases that have been on the front page of the newspaper.
And ultimately, do these people go to jail?
If
Well,
you find them,
It depends. It depends. If we're representing a company who's been the victim of an embezzlement, typically we don't want the employee to go to jail. We want to get, when I say we, I mean the company who's retained us.
All right. Well, we're out of time, and this is Keith Balla for It's All About Money, and we thank Alan Winters and Sam Rosenfarb for being our guests on today's show. Thank you.
Thanks very much.
thank you.
Thank you, Alan.
Thanks, Keith.